Hi everyone, this is Raj Malhotra. So one thing I always do is no matter what kind of market you're in, and no matter what your view is of the current market, you must always identify the tail trade. Because identifying the tail trade, it can make you a ton of money if your market view is right. Or even more importantly, it can save yourself a ton of money even if your market view is wrong. So let's identify the tail trade here, the direction of the tail trade, and what sectors I think you can find it in. So we're entering the historically slow summer season, and that tends to be bullish for markets. And right now, there are a bunch of obvious tells about the tail trade. So one thing is, with the VIX trading around 14, the market expects sub 1% moves in the S&P daily, which is generally bullish. And more importantly, it expects low correlation, which means that some stocks go up and some stocks go down. And also, the bears have been so frustrated by this rally, but they just keep doubling down and ignoring obvious signs like the breadth of the market. You'll get equity strategists like Mike Willis of Morgan Stanley that are just doubling down on the same narrative. You've got mutual funds that have continued to stay underinvested, and hedge funds that are long short. They're generally showing returns. They're just lagging the S&P. So all that means that the tail trade is clearly to the upside. But more importantly, I think it's in specific sectors, not just being long the S&P or the Qs or some other index. So the key is when you're trying to find trades that could show asymmetric returns in the next 3 months, should this rally broaden out. So where is that going to be? Is it in technology, which has been the obvious leader of the market so far this year? I think probably not. I mean, while tech can continue to rally, I don't see the same gains we've already had. In fact, you might have seen the top of tech as a whole so far as people pile into that trade from here. So what I want to do is I want to look at sectors here that have had a strong June, and could that be a tell for where you could see large gains over the rest of the summer? If you look at the returns in June so far, the best returns have been in home builders, consumer discretionary, industrials, material, and real estate. Now, clearly, those are not consensus longs, and those are clearly not longs that you would expect to have these kind of returns should the market go into a recession or the market expecting us to go into an imminent recession. In fact, it's pretty much the opposite. I don't know anybody that was talking about home builders and consumer discretionary as the place to be in June. You know, the doom and gloom about consumer spending falling off a cliff, well, that just hasn't happened. In fact, if you look at data, the consumer has been pretty strong, and I'm pretty sure it will stay strong this summer. And that's where the opportunity is, in my mind, in consumer discretionary and retail. And to be clear, the names I'm talking about long tail trades are not the obvious longs, the ones everyone holds like Home Depot or Costco or even specialty retail like Lululemon or Nike. You know, all these names that I just mentioned, those four, they all have market PEs or premium PEs evaluation in the S&P. And I'm not talking about travel names like hotels or airlines or cruise lines. Now, granted, they've been strong, but to me, that was not a surprise given the seasonality of those names, and plus the revenge travel post-COVID. I could see home builders continue to rally because the housing market stayed really strong, but I'm looking for something a little bit more juice here and something that can give you a monster return. And where I'm focused right now is small cap retail. Because to me, the hatred for small cap retail and small caps pretty much as a whole has been way overdone. You know, many of these small cap retail names, they traded doomsday valuations, basically predicting a 2000 type recession. And to me, this has created a perfect storm for low market cap retail to have the potential for monster moves. So as long as the broader market stays around these levels, but the breadth continues to improve, there's tremendous potential for these names because traders and fund managers will have to stop ignoring them as they keep moving. And while some of these names have had big moves already, especially in June, to me, there's still a lot of room to run here. So let me give you one example of name that I've been in that fits this criteria. The ticker is DBI, Designer Brands International. For U.S. Shoppers, it's also known as Designer Shoe Warehouse. That's their big store. Stock's up almost 50% this month. Like I said, it fits the bill of a stock that's been universally hated, just like every other generic small cap retail. And if you look at its recent move, even with that 50% move higher, it's about a $600 million market cap here, but it's still down 30% in the last year. Because remember this, the consumer, especially in the U.S., is not dead yet. The U.S. consumer is like Jason Myers from Halloween. Just when you think it's dead, he just comes back for more. If you look at the company specifically, the stock's predicted to make about $1.50 a share. It's got a PE of around 4.5, which is well below the S&P, and it's yielding a dividend of over 2%, which is above the S&P dividend yield. So they've also recently announced some positive catalysts, and I'm not going to tell you what they are because that's for you to go research. I'm not here to do your homework. You guys go do your homework here. I'm leading a horse to water here. It's up to you guys to drink. There are so many stocks that are retail focused that have just been beaten down due to these Great Depression expectations. To me, if market sentiment just becomes a little less bearish, these names can really rally to the upside, and probably hard. And the beautiful thing about this is these names combined with a low VIX, it's a perfect setup to buy cheap call options that can have tremendous convexity to the upside. There are many designer shoe brand names out there in the market right now. And if you do your homework and do the work and willing to put in time, you can make a fortune in these names. I have at least 5 more in my portfolio that could absolutely hit. And I would tell you what all 5 of them are, but if I did, I'd have to kill you. But in all seriousness, it's up to you to go find those names. There's cheap vol out there. These names can have monster moves. They're out there. Go find them. Happy trading, guys. I'll see you on the other side.